Give me a second, guys. Yes, Dada. You can't eat anymore? Okay, leave. Good job. All right. Uh, Futures coming down all the way from here and touching the mean on the 15 and bounce off of that. So my expectation is that futures will be range bound. Futures will test this 39, 38 number again. And on the market side of things, that I think that is 39.44, no, 39.36 perhaps. We'll check this SPX as well, but this range should be still intact. To the upside, this is 3940, and to the downside, we are looking for a 3900. So this range is still intact. And beyond that range, when the market starts to push beyond that range, either to the upside or to the downside, then we will take a notice of that. Then we will adjust accordingly. For now, this is a range that we are looking for: 3940 to the upside and 3900 roughly to the downside. So this is what, here it is. The actual range it is plotting is 3953 to the upside and 3900 to the downside, and this is the range I want to be operating on. With respect to SPX, it might be a little bit different, but by and large, this should be the range. On the regular candles, there you go, 3940 something, and to the downside, we're looking at 3900. And either ways, if it breaks above here, then we're looking for a push into 200 on the 1 hour, 3964. Yesterday, the same range. Yesterday, the same base case, 3940 to the down, 3940 was the base case, and 3965 to 3975 was the range to the upside. That was a good to have. And to the downside, 3920 was the base case yesterday also, and 3900 was a good to have, and that range doesn't change today either. We'll still look to trade within that range, and if that range breaks either to the upside or to the downside, we will figure it out. Yes, Dada. You need tissue? Here, Dada, take a tissue. Yes, Dada, it's clean. Good job. All right, so that's the range that we're looking to operate within. And should that break, then we'll look for a different number. However, now yesterday, this is what we saw happening. Futures, or rather the market pushed up into 3980, then came right back in after the announcement. Now, that doesn't mean that it's not going to do the same thing. However, again, the challenge for the markets are the same: hit of 5, which is at around 3940, and if that clears, we're looking for a test of 8, which is at about 3962. That is the reason the range is the same to the upside, and the downside again 3920 and 3900. If it breaks below there, then we're looking for a different number. I'll keep you guys updated on that. Weekly chart don't really matter right now, as of now, because we are trading in a tight range, but at some point during the sell off, we will hit this number. I don't doubt that. It's just a matter of time. This will happen. 3490 or 3500 on S&P, about 400 points down from here, give or take. This needs to happen for things to for a real price discovery to happen. We need to push down into 3500s. Cool thing. Now let's jump into SPX real quick, and then we will look at. All right, so market should be trading somewhere around right about here. Right, market should be trading right about here. This is, guys, take it easy for some time. Right about, right around here. The market should be trading right around here. Right. So market should be trading somewhere around here within this range. It should appear this number here, and most likely should be hovering around this number. So to the downside, this is my base case, 3917 to 3920. This is my base case to the downside. And should that break, then we're looking for a push into 3900. And again, that's the exact range that I'll be playing to the downside. and the upside it remains intact. 39.40 to the upside, right about here. Let's think perhaps a little bit. We need to expand our range here, perhaps into 39.50 to the upside. Let's go on the 1 hour chart. This is much more clearer. Right. So if the markets were to open here, which they wouldn't, if the markets were to open here, then this would be my base case 39.89, 39.90, and we should break that to the upside, and then a 4,000 would be the next one. Now, that's not the case. The markets are hovering somewhere around here, 39, 39.25, 39.29, somewhere around here. So let's see, it's 39.30, and then the base case to the upside would be this 39.50, the 8 on the hourly. If that clears, then we're looking for a push into 39.66, and then probably into 39.85. And this is a super trend that I'm counting on to act as resistance again around 39.80. This is the super trend. And my base case, again, I'll go by Haikanashi. This is a better indicator. The base case would be 39.48, and the good to have would be 39.78. So this is the range to the upside. And if that breaks above, then we're looking for a push into 39.98. Let's round that up at 400. And to the downside, if the markets pierce below where they are trading right now, perhaps most likely here, and if it enters this zone, the inner Bollinger Band, then my base case to the downside is 39.10, and my good to have would be 3900 or 3894. If that breaks, then we're looking for a direct push into perhaps into 3860s and 3850s and 3820s. For as of now, not plotting that, because this seems to be uh, the dip seems to have been being bought. So that's the reason not really plotting. uh, how do we go down, right? So but we, if in fact we go down, because I see, this thing is coming down, SMI is coming down. If in fact we start to go down, we know how it goes. After 3110, most likely we'll test this number 3892, and then perhaps back into 3870s. Let's see how that works out from there. On the daily side of things, uh same, the range remains the same. The range exactly remains the same. The 5 is at about 39.50. If that clears, then we're looking for a push into 39.56, one standard deviation, and that enters that. And we are looking for a hit of 39.72 to 39.78. 39.78 being a rejection point from this, right? So if everything goes well, for whatever reason, I don't know why would it go up, but if it does in fact go up, then we're looking for a push into 4,000. And if it does clear 4,000, then we're looking at a clean hit of 40.31. And if 40.31 clears, then we're looking for a mean of 40.75. That's how it's going to go to the upside. And at this point, I am more inclined to the downside. I would want to see more announcements coming out. However, this all depends on Apple. Apple should push down, and if Apple pushes down, everything will come down with it. As of now, let's see where Apple is, and if we can plot Apple correctly and trade VIX correctly around Apple. Now, Apple came down after hours, after the announcement, fairly easy. It was relying on this 50-day moving average to support it. It broke below that. Now let's see what is going to happen. So my base case to the upside is again the 50. Whoa, this is a 200. All right. So this is going to be a tough thing to beat. So 500 on the 15, there's 200 coming, there's a 50 coming. So in fact, if it does actually clear here, so 141.37, this should, well, if it clears here, then this is my base case, 141.73. And if that clears, then we're looking for a push into 142.14. Immediate, this is the chart that I want to be acting upon if it's an immediate trade that I'm putting on. If it goes to the downside, Then we are looking for a push into 137, sorry, 139.77, and then that should act as some sort of a bounce point. That breaks, we are looking for a push into 139.25. And honest to God, I want to see this thing come back in around at least 136. And right here, this is the chart again. I understand this chart better than any other charts. The range it is plotting for me is about 143.91 to the upside, and to the downside it is 139.93. And I would want to see it come to the downside, but for now, and it has I think the line is here. According to this indicator, the line is here, 141.90. That would be my base case to the upside. If that clears, then we're looking for a push into 142.90 is my good to have. And should that clear, then 143.94, this is where it should stop going up to the upside. And again, to the downside, my base case, if it breaks below the moving average here, 140.97, I think we'll look for a push into 140.53. This is my base case to the downside. If it breaks below there, we are looking for a clean hit of the mean here. This will be a very good bounce point. And indeed, if it breaks below there, then we are looking for a push into 138. And this would be a big number to cross. The mean and the 50 both are at the same point right now. If it breaks below there, then we're looking for a clean push into 139, and then most likely 137.24. If in fact, if it breaks below this 138 number, and this is the number where it is coming from, 138. So again, this number will be tested. And if this time it breaks below 138, then we're looking for a sustained push down, I believe, into 132. And this should be bought about uh, from multiple sources. Actually, something like an Amazon. Amazon has to push down. It is trading below 2000, and I'm expecting this to push down. It is not much of an advertising business, but there is a component for that for advertising as well. It needs to come back in. Obviously, Facebook is another one. It is total ad revenue business, right? It is better than 8% down right now, and I expected that to continue and most likely push into this number, which is I think 100-day moving average on the monthly. And I will be looking for puts around this number, 172 or something like that, for it to come down. Uh, might come down, might not come down. Again, if you're playing options, understand this thing. It is not that we are looking for the strike price to come down into the spot price. Sorry, the spot price to come down or go up into the strike price. We are looking for premium appreciation. That is all we are looking for. As soon as the premium is appreciated, 1 to 5%, that's my exit. That is all I do, and that has been consistent. That is exactly I operate. I'm not looking for those 100%, 500%, whatnot. Uh, that will happen whenever that will happen. That is not normal. 1 to 5% is normal. And when you say 1 to 5%, put that in the context of your bank giving you a return of maybe less than a percent per year, right? So you're still getting 1 to 4%, 1 to 5% on probably in a trade in like 5 minutes. So think about that, perspective. Right now it's trading at about 180, and I'm looking for 172. And Google, this thing needs to come back in. I think it will keep coming back in. I think it will break perhaps 2000, and most likely this is where it is headed into 1990 or something like that. And will I be a net buyer of Google here? Still no. The answer is still no. I would want to see perhaps come down into 17 or something like that. But I'll be trading both sides, Google and Amazon. And the other data point, Netflix, if you are somebody who is passive, then this is where you need to be selling your puts and keeping that premium. Very easy trade. Just keep selling this puts, keep collecting that premium. That's what I've been doing. That's been a cash cow. Uh, Tesla, nothing is complete without Tesla. We would want to see Tesla come back in, break below 650, and this is where I'm sitting for Tesla. right? I'm still holding those 400. Those are very cheap. I'm still holding those. In fact, I'm still holding those 350s. So will I exit today? Most likely the case that I'll exit that trade today, right? And because the reason that I'm exiting is that my theta, sorry, my gamma is not accelerating as much as I would have expected my gamma to accelerate. It is not happening. So that's the reason I'm looking for an exit on that trade. Maybe a minuscule sort of a profit, but it is what it is. Green is green. I would want to exit that trade. Most likely, I'll put on the same trade a little later, and my active trades would be closer to the money or in the money, at the money. That is where exactly I operate on, very close to the money, right? And Tesla on the 1 hour, this is the chart that I understand. This is the chart that I operate on. The range it is plotting right now, it has taken a leg down. It has taken a leg down. So that is telling the momentum is to the downside. And let's see if it can get to 641, look for a bounce, and then perhaps push down further, right? This is still intact to the downside. This cycle needs to complete. And this is still intact to the downside. This cycle needs to complete. The only thing that is bothering me right now is this red bar. I don't want to see another red bar. Perhaps I would want to see another purple bar. So, and the range yesterday, it was plotting the range, and the range was steady, right? It wasn't pushing up or it wasn't pushing down. Today, the range got pushed down, and then that if you're short Tesla, that is very, very encouraging. And this is the range 679 to the upside and 641 to the downside. So immediate trade, most likely, I think it should come down. That's what I'm looking for. Perhaps a push down into the 646 and a break below that. We'll look for 641 and then perhaps a 638. Then we're looking for a clean hit into this number, about 600, 594 and 600. However, if you're looking at a bigger picture, this is where I'm actually sitting for Tesla. I would expect it to break below all of these, not in a straight line. Of course, not in a straight line. Keep bouncing here at 590, and then perhaps bounce around at 500, then probably around 400. This is actually where I'm sitting for Tesla. This needs to happen. And in fact, if Apple kind of pushes down into below hundreds, I would want to see Tesla break all of this and come back into this number, 212. Even this number is a little bit expensive for me to pay for Tesla, right? And that is the reason I'm not a shareholder of Tesla. I'm not an investor in Tesla. Tesla is good for trading, but even at this point, about 200, I'm still not an investor of Tesla. It doesn't matter what. It is just a glorified meme stock at this point. It is good technology and whatnot, but it is not that good to pay, 700 dollars for a share of Tesla. I just don't believe that. Uh, 90, nah, that's not sustainable. So yeah, and one other data point that I'm looking at is the 10-year. The 10-year is miraculously kind of hovering around this number, 2.8, and to me it looks like it's just waiting on something to push down. I would, honest to God, I don't want to see this push down. Again, I've been harping about this for a better part of this month. That 10-year needs to stay above, at least about right about here, at least here, beyond a 3.2 or something. We might just get that. We might just get that, during the next FOMC, where they are going to say, 50 bips again. Fall in love you more and more every day. Nice.
Love you, dear.
Got an opinion on USO or oil in general? Oil will hover around this number, 100, for the most part of it. And oil, I think, has a room to the upside before they can figure out what's going to happen, how they're going to replenish the supply shock of it right now, which is the Russian oil going off of the market. So that's the thing. I accidentally swung 675 call and pretty sure it will be down like 30 points. Should I cut it at the open? If Tesla pushed like yesterday, it's a 527 call. Yeah, most likely, most likely that's the case. Right now, right now the thing that is going around with the PE coming down or the E side of things coming down wouldn't affect Tesla as of now, but it will affect everything in due course of time. That whole equation will affect every single thing. It doesn't matter what it is. Now I'm just waiting on Apple to get affected. That is all I'm waiting on. And Apple pushes down, you can just blindly close your eyes and take a dart at any stock. Basically buy puts on any stock that will work out. That's just basically how it's going to work with Apple coming down. If Apple does come down, doesn't matter what stock you have to pick. Remember, past 2 years, doesn't matter what stock you pick, it used to go up. The same exact phenomenon will happen to the downside if and only if Apple starts to push down. People, in fact, if you see the holdings of institutions on Apple and Microsoft, uh, they are still not willing to cut down on those, and that needs to happen. And as soon as that happens, we're Gucci, Armani, Prada, whatever it is. So here is the chart for 10-year, and the 10 years seem to be threatening to come back in. So this is what exactly I'm watching right now, right? So we all understand this stuff. 8 and 21. So this is what majority of the market participants are watching right now, and we don't want to see this cross. We don't want to see this cross to the downside. That wouldn't be a good scenario. We would want to, I would ideally want to see this 8 pushing up here, not the price so much. Price might come down, whatever it is, but 8, I want it to bounce off of that 21 right here, right? Perhaps one more red candle or something like that, but this needs to bounce off of that. 8 below 21 should not happen. If that happens, then we're in trouble. Cool thing. Any other data point, question, comment, anything that anybody was suggesting? 657 is achievable. Nice. Playing USO, nice. Armani, I like that. Cool thing. Apple will die. Yes, Apple dumping. Cool thing. So yeah, so we understand all of this stuff, and I think Apple was pushed down below than what is this trading right now, and I want to see that come down into that 138 number. This is pretty important here for Apple to test and break the 100 moving average on the weekly. All right, guys, about 4 minutes to the open, and let's stick to a game plan. Let's not as soon as the market opens, let's not try and run around. Let's stick to that game plan, right? The things happen the way they happen for a reason, right? So let's stick to that game plan, and doesn't matter what trade are you making. Well, Apple, SPX, SPY, whatever trade that you're taking, right? So have that stock, plot that stock out. Everything will follow the same exact model. There is no secret sauce. There's nothing, there's nothing out of that ordinary. There might be a situation or two where the stocks might do differently than what the moving averages are suggesting, but by and large, this is how they need to function, right? There's no secret sauce. There's no secret code to it. Everything will have to follow the moving averages, even if you're talking about algos and whatnot. The way that the algos function, or the way that the logic is programmed into algos, this is exactly how they do it, right? They are actually programmed to look for all of this information, perhaps a little bit more here and there, like volume and whatnot, but majority of the time, if you're day trading, this is how exactly it will function. All right, cool thing. So yeah, let's move into sanity, and good luck with everything today.